Does size matter? I'm going to repeat that question. Does size matter? Do remember, I'm asking this question keeping in mind today's TEDx theme, Unmasking the Reality. Good morning, ladies and gentlemen. Welcome to this interactive session on unmasking the future of wealth. If I were you, the first question I would ask is, who is this guy who has the audacity and the authority to talk about this? Well, I'm a seeker, author, real estate development specialist, and a personal finance enthusiast. I must confess, I don't own any magic cubes to look into the future. All I can do is talk about some interesting global themes and place it at your feet for you to chew on. In the past few months, you must have seen this term being used across newspapers and articles about the K-type recovery seen in our economy after COVID. So what's this K-type economy graph all about? In fact, I think about an alligator's mouth when I look at this. There's a prong which goes up, which represents strong businesses, strong companies which are growing and becoming better and better. And there's a prong which comes down, which represents smaller companies which are literally dying. You can see this all around you. Think about any product or service. You think about email, there's one Gmail. You think of operating systems, you have Android and Apple. You think of social media, you have Instagram and Facebook, and nobody else. There are some small competitors like BeReal, but they're very, very small. Nobody is a competitor. In fact, it gets worse. Facebook and Google, in fact, they bought over YouTube and WhatsApp. All of you all would have heard of this management jargon called 80-20. In fact, this came about because of an Italian economist called Pareto. While he was walking in his village in Italy on the coast, he noticed that 80% of all the yachts were owned by just 20% of the people. As he explored this, he noticed that this is everywhere. In UK, he found that 80% of the farms are owned by 20% of the people. He saw this even in nature. In his garden, he had pea plants. And he noticed just 20% of the pea plants gave him 80% of the harvest. So, does this 80-20 principle, which is widely accepted across management, does this apply even to finance? Well, it gets worse. The ratio skewed to 90-10, 95-5, and 99-1. Just 1% of the world's population owns 43% of the world's assets. If you increase that to about 1.5% of the population, they own almost 50% of the world's assets and resources. On the other side, the bottom 50% of the population globally owns just 2% of the assets. Let's move to something more interesting, something which I enjoy, motorsport racing. So in Europe, there are two large motorsport races. One's in Monaco Grand Prix, and one's in France, in Le Mans. It's a 24-hour race. So on a Saturday, just like today, but June 11th, 1955, Pierre Levert, he's the head of the French team, and he was driving a Mercedes SLR, also called the Silver Arrow. It's one of the most expensive cars as of date. So as he approached the curve, after a couple of rounds, at 6:05 p.m., as he tried to negotiate the curve, he lost control of the car went over the barrier and went to the audience. In a minute, 83 people were killed instantly, and about 120 people were very seriously injured. To date, it's one of the most serious motorsport accidents to date. But just 1,000 feet behind Pierre Levert was Juan Manuel Fabien. He was also in the French team, but Argentinian. As he came and almost took this curve, he decided to stop his car and got out, thus serving his life, his co-pilot, and all the drivers behind him. At 7:30 that evening, the BBC interviewed him, and they asked him, Mr. Juan Manuel Fangio, you didn't see this accident. Why did you stop the car? He replied, saying, I'm a 50-year-old world champion. I'm driving the Mercedes SLR Silver Arrow, 3-liter, 8-cylinder. I'm driving at more than 200 kilometers per hour. And when I look at the audience, none of the spectators are looking at me. So I knew there was a problem and stopped the car. Look at his overconfidence. He would have been the laughing stock of people. But he had the ability to understand weak signals and decided to act on it. I don't know about you, there are many people who can't even remember where they parked their car in the mall just after a few hours. On the other side, you have Mr. Fanjo, who's able to decipher weak signals at 200 kilometers per hour. So where does all this lead us to? We spoke about weak signals. We spoke about the 80-20 principle, 90-10. We spoke about the K curve. Well, the problem is, when we talk about financial independence and freedom, people think it's just reserved for the rich and lucky. It's an urban myth. Not true. We're going to look at some of these myths and look at practical strategies for each of us to invest in real estate and modern assets. When you first think about real estate, the biggest problem is the high entry barrier and the costs. If you imagine a young professional Molly, if she wanted to buy a modest apartment, she just couldn't afford it. And even if she does, she'd probably have to get it under a 20-year mortgage. How depressing. But if there's a paradigm shift, is there a way that she could possibly own part of a luxury apartment in Bombay, or maybe a vineyard in Bordeaux, or a commercial office space in New York? It's possible, and it's possible due to the power of fractionalization and tokenization of real-world assets. Even the governments of the world are aware that good income-producing commercial assets are just outside the reach of the retail buyers. In fact, in 1960, the US Congress passed legislation creating an instrument called the REITs, Real Estate Investment Trusts, whereby they brought retail investors into the pool of possible investors to these large investments. The main problem is most of these large income producing assets are highly illiquid and have a very high entry barrier. These are instruments which open it out. In India, the first one was launched just in 2019. And just a handful of them after that. It's just a drop in the ocean. So how do we take this and accelerate this and put this on steroids? In fact, BlackRock, which is one of the largest mutual funds in the world, has described this as the possible next wave of investments. What makes him, the CEO of BlackRock, say that? Is it just a fad? Well, if you think about what exactly is fractionalization and tokenization, fractionalization takes a large investment, breaks it up into small parts, just like shares of a company, and takes it out to the retail buyers. Tokens, you can think of a digital key, which has information and currency. And this sits on a technology called the blockchain technology, which is a large ledger, immutable, permissionless, and almost impossible to hack. The second wave, or the second trend which I noticed, in fact came about in 2008-2009, when three forces of nature came together. In 2008, there was the financial crisis, where a number of large banks like Lehman Brothers died. There was complete loss of faith in banks and the government, because they were just not doing anything. Then we had the blockchain technology which came into being, whereby this is in fact like a large database which you and me could use. And the third and most important was the birth of Bitcoin. Bitcoin was born in 2009 by an individual called Satoshi Nakamoto. He also saw all these problems we talked about, but decided to do something about it. And he created Bitcoin, which is described as private money or digital gold. So you may wonder, what is the fuss about all Bitcoin? In fact, the biggest problem is there's so many misconceptions around Bitcoin. How many of you all believe that Bitcoin and cryptos are banned? That's right. Most people have this misconception. It was never banned. It was always around. In fact, the government tried to ban it once. The Supreme Court overruled the ban and said you have no business banning such a thing. So why are the governments across the world so scared of Bitcoins and cryptocurrencies? Well, this could be one of the largest threats to the monopoly of the government. If you look at the Indian rupee, I don't know if you all know this, at the time of independence, it was on par to the US dollar. As we speak, it's about 86, 87 rupees to the dollar. It's going to be at 90 very soon. All currencies across the world, US dollar, Indian rupee, pound, they're constantly depreciating. Why are they depreciating? It's because of a thing called inflation. So what's inflation all about? Well, it simply comes, one of the primary reasons is overprinting of currencies. Whenever the government decides it is money, it starts printing currency, and thereby causing deflation. The Satoshi Nakamoto came about with Bitcoin, where he took away this power. In fact, you want a good analogy of this is think of the internet. Today it's so ubiquitous, right? Is there anything special about the internet? But what is the internet? It's like a large ocean of information. There are no borders, nobody owns it, nobody controls it. Free flow of information. Think of the same thing, but when it comes to finance, no borders, I can transact direct peer-to-peer. The last, in fact, it's very interesting to look at some of these influencers and how they believe in it. The first person I talked about was Satoshi Nakamoto. Another guy which really inspires me is a person of Indian origin, and he goes by the pseudonym of Metakovan. In 2021, he set the world ablaze with what he did. There was this digital artist called Beeple. He, for 5,000 days continuously, he captured a picture and put it all together. So that work constituted 13 years of his work. But this digital piece of art, which is put on the screen, is digital art. And Metakovan went to Christie's and auctioned this piece of art for $69 million. Can you think of buying a digital piece of art for that amount of money? That is the amount of trust and faith these guys have in these new technologies. Coming to the third and most interesting trend. In fact, I'd like to paint a picture of my grandfather, a typical day in my grandfather's life. He loves stock trading. So what would he typically do? In the morning, he'd probably take out the paper and reads some interesting political information, any announcements by the Fed or the finance minister. If he had some particular stocks he was interested in, he'd probably do some analysis of the balance sheet and all these financial news. Later on, he maybe have a discussion with some of his friends. Once he wanted to buy something, he'd probably reach out to his stockbroker and ask him to buy it. And if he already had that stock and he wanted to dispose it, he would say, please sell it. Right? Simple, right? I think many of you all may be doing it. Many of your family may be doing it. What's the problem? Well, the problem is I told you a story which is about 40 to 50 years old. Most retail investors do this exact same thing even today in 2025. When you think of these large mutual funds, hedge funds, those people in the 1%, they're often called whales. Because when they move in the market, they move the marketplace. The problem with people like you and me, retail small investors, we try to copy them. And that's where it's estimated that 95% of people who trade in the stock market lose money. Instead, we need to be looking at a term and thinking of being a shark, which is small, nimble, agile. Let me give you an illustration of this point. I spoke about Bitcoin. Just 2 years ago, Bitcoin in 1 week fell by 22%. It fell to a value of 16,500. All the market pundits said, oh man, this is the end of Bitcoin. Snake oil. Do you know the value of Bitcoin as we speak? $100,000, 90 lakhs per Bitcoin. How many assets do you know which can grow from zero to $100,000 in 16 years? How many assets do you know will go up 5x, 500% in 2 years? I can't think of any other. But what were the retail investors doing? Hiding, saying, oh my God, this is the end. So let's bring all this together. We spoke about the K curves, economic K curves. We spoke about the global inequality. We spoke about trends like tokenization of assets. We spoke about new age assets like cryptocurrencies, blockchain. We spoke about transforming the mind. So what's the point of all this? Well, the point of all this is either you can decide, oh, I'm so depressed, there is 1.5% of the world owns so much, or you can think of what can I do about it. The future of wealth is tokenized, transparent, transformative. All this, the purpose of all this is to democratize wealth. And the end goal for you and me is to achieve financial freedom today and not when you retire. Thank you.